Hey everybody, what's going on? In today's video, we're going to take a look at some earnings we've still got coming up this week. We'll look at some more economic data that's also coming through the week here, or next couple of days. We got lots of charts to go through, of course. We'll look at some setups we're playing, and we've even got a couple of new setups. So, by the way, why don't you smash that like button? We put a lot of work into these videos, and it really helps us out. And if you're wondering who I am, my name is Kevin D, and I am here to help you make sense of all this. So we do these videos every week to help our members stay up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders and investors, and members get to take part in our live streams and our live mentoring sessions. So check out the link down below in the description and come join us on Discord. We'd really love to have you there. Here's a quick disclaimer. Everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice, and all trading and investment decisions are your own and done at your own risk. All right, let's get into this. So what do we got? Well, okay, actually we're going to look, we'll look at the chart later, but we just had Tesla earnings after the close today. But tomorrow morning, we've got some more semiconductors to come. We've got Taiwan Semiconductor coming before the open. We have American Express before the open. AT&T is another one that's closely watched. Rite Aid is probably closely watched. And Dr. Horton, one of the home builders. There's some stuff going on in the home building sector. So interesting ones to watch here. Tomorrow after the close, we have CXX. They're one of the railways. I'm not sure if they're one that had the accident recently. I mean, all these railways have accidents all the time, right? Some more serious than others, though. But yeah, that's probably about the most interesting one, CSX, after the close on Thursday. And then before the open on Friday, Procter & Gamble. And maybe Freeport-McMoRan if you're into copper or any of the precious metals. And that's about it for the rest of the week for earnings. And then it'll start getting really busy next week and for the next couple of weeks. I don't think most big tech is next week. I think it's the week after, but I'll double check that, of course, before the weekend video. And as far as economic data goes, we've kind of got most of our housing stuff out of the way. We do have existing home sales tomorrow before the open, and we also have unemployment claims before the open as well tomorrow. On Friday, these two are pretty important: the Flash Manufacturing Purchasing Managers Index and the Flash Services PMI. And I think that the Services PMI will be very closely watched. We want to see a little softening in there because that will soften inflation. And I think one of the reasons we gapped down this morning was some inflation reports out of the UK were pretty hot. There's still inflation up into double digits over there. And I think that threw a little bit of a scare into the market, and that's why we opened with a big gap down. So on Friday morning, we really want to see a little bit of a pullback in this Services PMI. Maybe not so much in the manufacturing PMI, though. Too much of a pullback there, and then everybody's going to be worried about recession. So that is the rest of the week for economic data. We are going to take a look at the markets. We'll look at major indices, important international markets and commodities, the major sectors, and our setups. So let's get right into this. We'll start with our market regime tracker. So we're looking back the last 1 to 3, 4 weeks and to track, how the market's doing. And you can see we're still kind of stuck in this sort of bullish chop where we have this ever so slight uptrend, but it's kind of more chop than uptrend. And really, I think the way it feels like a 2 or a 3. It really doesn't feel like a 5. But this is why I've come up with some measurements, quantifiable measurements that are objective, not subjective, because I don't want to be measuring my sentiment. I want to measure this off of real numbers that that only change when the market is changing. So there you go. On a trend factor here, we're about a 5 right now. Okay, let's take a look at our markets. We'll start with the S&P 500, and you can see this just choppy grind up. It's just so, I don't know if you're a day trader, a swing trader, but whatever kind of trader you are, I'm sure you're finding this difficult. You can just feel like, I don't know, maybe this is like a vampire market. You can just feel it sucking the life force out of anybody who goes near it. People are still making a little bit of money, but not much. It feels like scraping pennies off the floor. And it's not, and it's not even like picking up pennies in front of a steamroller. If there was a steamroller there to make things exciting, there's no excitement. It's just like I said, picking up pennies, just making small amounts of money, and trades aren't really going anywhere. The swing trades aren't really working. They work for a day or two and then they pull back, so you get out. Yeah, just a real grind here right now. So looking forward to something happening. Hopefully soon. And you can see here that we're really starting to kind of tighten up a little bit under some resistance. We do have that uptrend line. So, this is suggestive that we break out to the upside, but I'm not sure what the catalyst is going to be for that. So we'll just have to, just got to deal with it, right? Volatility will come back here. And things will definitely get more exciting sometime. We just don't know when. Probably when we least expect it. All right, let's look at the NASDAQ. Same sort of thing here, just a grind, just chop. But, a slight upward slope to that chop. And IWM. This one not so bad that it's chopping around where it is. Considering how much this has pulled back lately. We are consolidating nicely under some resistance, and again, we expect to see this break to the upside, and then maybe that's when we get a nice burst of volatility. We get enough momentum off of this, so over the course of a few days to take us all the way back up here to this resistance here and take us through all these moving averages. All right, let's look at the volatility index, and as you might be able to guess, this has come down quite a bit. We're in a 16 handle on this now. I'm, kind of surprised. I didn't expect to see that anytime soon. How far do we have to go back to see a 16 handle? I guess back in here. And we even actually today had a lower low than we had back in January of 2022. Wow. Okay. So, we have not seen this kind of low volatility in quite some time. Let's look at our 10-year yield. Part of the reason I think that we're only, capable of grinding up right now is because we're seeing a grind up in the 10-year yield. We're seeing these yields come back up. So I guess in a way we should be thankful that we're even moving up when we see yields going up like this, because this is a fairly strong move up considering what yields have done for about a month and a half or even 2 months now. I guess be thankful that, yields moving up like this, that the market's actually not even moving down. All right, let's take a look at our dollar index. And we can see that this is kind of mostly going sideways here. Seems to be trapped under the 21-day moving average, but also above a support level here. And if you remember from the weekend video, this is a really important support level here because this is a giant head and shoulders top that we're looking at here. I'll just sort of highlight this formation a little more. I don't have it drawn. I don't have the head and shoulders drawn in here, but I think you can see it. This is your neckline here. You got a shoulder here, another shoulder here. So kind of waiting for this to break down a little more here. All right, let's move into our global indices. And you can see same kind of idea here. Really nothing going on, right? Chopping around sideways here in the ACWX, right under resistance. Not looking super bullish, but not looking at all bearish either. So again, we should expect to see this break to the upside. EFA, Europe, developed Far East, pretty much the same thing here. Choppy, broke a trend line, barely, but this trend line is also really steep, so we kind of expect this to get broken. So this is kind of suggesting we see a little bit more sideways action in here. before again continuing higher. EMCX, this is emerging markets ex-China. Now this one had quite a gap down today. You can see it had some sideways movement there and pulled back today right on top of support and the 21-day exponential moving average right there. We should expect to see this bounce and make its way back up. And FXI, China large cap. You know, like everything else, kind of doing nothing, trapped between some moving averages, some resistance, you know, some resistance, some support, just wandering around lost in here. So I don't know, flip a coin on this one. Gold. All right, so gold's had a little bit of a pullback from those highs. We do have some buying wicks here, a little bit of a hammer candle today after breaking down through its 21-day moving average. My best guess on gold is this needs to go sideways for a little bit. But this is really affected by, you know, global macro. You know, the kind of thing where anything could really happen if the macro changes. The gold miners, same sort of idea here. A little bit of a pullback, possibly rolling over after hitting fairly strong resistance. Silver futures. So these had been very strong and pulled back a little bit. And you can see we got a nice hammer candle there today, except that it's on low volume. Again here, just like gold, I think this just needs to consolidate sideways for a little bit. Copper futures are doing nothing. Or nothing other than winding up in this triangle, this symmetrical triangle here. You know, the tighter we get in here, the more likely we are to break out of there. Although this just looks like we're going to get, look at these moving averages. They're all just totally flattening out. So this looks like this may just go sideways for a while longer. All right, let's take a look at crude oil. This is starting to roll over here. You can see we came up, we tried to break through this major resistance, almost touched that 200-day moving average, and then we've rolled over. Now, we've come down to, you know, almost halfway into this gap. We found the 21-day moving average there and decided to find support on that for now. I suspect we see a little more downside. I think maybe this needs to come all the way back down to the bottom of this this old gap before it is ready to move back up again. Natural gas, some kind of interesting price action here. You can see a couple days ago we tried to break out of this base that had been building. It tagged a little resistance overhead, the bottom of those old former bases, and the 50-day moving average right there, and it said today, don't want to go there. I think that we should expect to see natural gas pull back into this old base again. You know, this whole breaking out of the base thing for natural gas is breaking out of the base and failing. Whichever way it breaks out, you know, is pretty common thing for natural gas to do. So, probably more downside in natural gas. XLE, the energy sector ETF, you can see that that's rolled over a little bit. Not looking super bearish or anything here, just looking like maybe it wants to consolidate. This will continue down, though, if gas and oil continue down. How about TAN, the solar ETF? Because that had a nice move the other day on Monday. Tried to break out of this triangle that was in. Look at that. Got above the 200-day and 100-day moving average that was right there. And then couldn't go anywhere. Like everything else in this market. Said, nah, I'm just going to chill some more right here. XLY, consumer discretionary. You can see we are tightening up in this ascending triangle, right up at resistance here. Lots of flat moving averages right underneath it. We should expect to see that break out the upside of this. But again, I think we're just going to need some sort of catalyst in this market to get these things moving. Industrials, bit of a choppy mess. You can see we've been taking a little bit of a leg up here, kind of a stealth move up, really. But very small and choppy and really low volatility. The volatility's just dropped right off in this one. XLF financials. This is probably about the prettiest chart that we're going to look at today. It's so important for the market to see this move up. This is a good move up, digging out of this hole. And you can see it continues. And in this case, it's good to see that the volatility is dropping off. This looks like it will continue to just grind higher, and that's good. A little concerned what will happen at these moving averages overhead. We may have to pull back just a little bit after tagging those moving averages. And even on a bad pullback, it'd be a pullback to this the top of this former gap. And that would be a place that we would expect to see it bounce. I don't think it's going to pull back that much, though. I think that we should expect to see this over the next couple of weeks continue higher and, kind of get back up into here where it came from. And speaking of financials, KRE, the regional banks, look at this. We are seeing some positive price action out of this finally. So, you can see we had this descending triangle here. And really critical, important support down here at the bottom of this. We did not want to break down through there. And, anytime we had a couple of moves that tried to break out the top of this triangle, and, we've adjusted that triangle up a little bit. And you can see that we got into a bit of a sideways action, couldn't really go anywhere after getting through it, but today we had a really nice move. So today in a weak market, and financials actually weren't even one of the top performers today, but we've got this nice big green candle here. After gapping down, it reversed and moved higher. This is a very bullish candle. Now, we did stall out right at the 21-day moving average. I think that's fine. I mean, that's a natural place for it to stall, and that is a pretty big candle. What we need to see, though, is tomorrow is to stack another big green candle like this on top of this one. Maybe even take us up to this 46 level with another big candle. And, that would be really, really hopeful. And really, enable us to say, hey, maybe we're kind of coming out of the woods here on this regional banking crisis. So happy to see what's going on in banks and financials here. And if you look down at the bottom here, this is performance relative to SPY, relative to the S&P 500. And you can see today we outperformed, right? And look how we've really flattened out in here. So we're, basically equal performance to the S&P 500. So again, this is another hopeful sign. And if this can continue to turn up here, that will make me quite happy. All right, XLV Healthcare. Rolling over a little bit, nothing too serious. This had a nice run. Not thrilled that we've come down and now have a couple of closes below this important support resistance level, but we got a bit of a green candle today. There's no reason to believe that this can't quite easily go back up through here if the market, if we have a good day in the market. XBI Biotech. So nice action in here. Now, strangely, as kind of, nothing seems to really be going on. We've got, we've got biotech making some nice moves. Again, choppy like everything else. Big green candle, red candle, big green candle, red candle, big green candle. Does that mean tomorrow is going to be a red candle? Well, we did come right up into the 200-day moving average and stalled out there 2 days in a row. Almost really 3 days in a row, so hard to say. But after breaking out of this channel, this upward channel, which is really a bear flag, right? After breaking out the top of it, we've pulled back now to it and bounced. So that is bullish. I think the expectation here is that we should see some more upside out of biotech. XLRE REITs, these pretty much went sideways today, although you could call that a bullish engulfing candle that just drew today. But look at this, the way it's tightened up right between these moving averages. Let's look at staples. I don't think anything happened here today. Yeah, just a little bit of grindy sideways action. Utilities, believe it or not, this was the strongest sector today. Up 0.75%, but I mean, you can hardly even see that on this chart, right? again, you know, I mean, if utilities are the strongest sector, then really nothing exciting is going on in the market. Let's take a look at technology, and there was nothing exciting there. We had a little bit of a gap down. I don't think it's even worth drawing that gap in. I think that's going to close tomorrow. I feel like we'll be going up a little bit tomorrow. And XLC Communications, this is a little odd though. This fell out of this channel. I think there's enough support here. We've got the 21-day moving average. We've got that support level here. I think there's enough here that this can maybe either go sideways or just turn back up again. Doesn't seem too serious to me at this time. Semiconductors. Grinding sideways, being supported by the 50-day moving average. So, don't like that, you know, this uptrend. Oh, this is a really minor little uptrend line here. Not too big a deal that that's broken. But it really should get up and go here. We don't want to spend too much time down here. If we do, it's just going to fall out of here. And if it falls out of here, it could be a fairly quick move to the downside. All right, let's look at our FAANG stocks. All right, so you can see Meta. Meta has kind of fallen out of its downtrend, but it did it by consolidating sideways. And after such a big move like this, we have to allow Meta to consolidate sideways for a while. We are still above the 21-day moving average. We've got lots of levels of support below here, so this is not a concern at all. Apple, one of these stronger tech stocks today. And you can see that this, let's just zoom in a little bit here. You can see we've had this pivot level here that we've come up and had, you know, 1, 2, 3, 4 touches on and really couldn't get through and close above it. But finally today we have gotten up there and closed above it. Put in a, what is this, I think about a 9-month high or so. Got to go back into August of last year to see a close in this area. So this is good. I am liking this move in Apple here. I am going to be wary of this gap from August. And then obviously this 176 pivot overhead as well. All right, who's next? Amazon. So this was of all the FAANGs and a lot of the stocks that we watch. This was the strongest today. You can see we've got a bullish engulfing candle there on Amazon. Amazon that has really kind of done nothing for months. You know, this is the choppy grind higher kind of stock for the last 2 months. This is some nice price action. However, look at, you know, I mean, we tagged this gap and failed there at some point today. Barely failed though. I mean, we've closed almost on the highs, but still, you know, it's still below the gap, and then we've got that 200-day moving average overhead. So Amazon still has a fair bit of work to do here before I feel bullish on it. But there is a little something going on. If you're really like this company and you're really aggressive, this may be saying, hey, this might be your last chance before the train leaves the station. Okay, how about Netflix? Now, Netflix had earnings yesterday. Now, this candle here probably looks really bearish to you. Now, you know, but before we all go get all bearish and everything, well, let's, you know, look at this trend, right? Maybe we need to adjust this trend line now. You know, take this into here, something like that. That looks a little better. You know what? I'm gonna cut through this level here. I think this is a better fit for our purposes. There we go. Okay, so as you can see, once we zoom in, we've got a hammer candle today. Great big gap down on their earnings, but went lower, cut below that 100-day moving average, but bounced right back up again. Did it on some pretty decent volume too. Now let's get this gap drawn in because we definitely do want to see that from there to about there. So yeah, not ideal here, but not that bad either. And you know, I'm not too concerned about Netflix. I think that, you know, as long as the market doesn't fall apart or something, that Netflix will get up off the mat and move higher. And you know, it's just for fun. Let's take a look at the intraday chart on this from yesterday. From their earnings release. So you can see, you know, I mean, Netflix was very flat today, very much like, you know, most of the market was kind of flat today. But extremely volatile on that earnings release and then ground it right back. In fact, you know, so this is a 5-minute chart, but this doesn't really tell the whole story on this. Let's go to a 1-minute chart here. And yeah, you can see how quickly that move down and bounce back up again happened. So that, you know, the move down was just over 2 minutes, and the bounce back up was pretty quick too, almost immediate. And I'm sure this caught all kinds of traders off guard in here. I mean, that got really messy, but nice strong action to regain all of that, because this move down was, I believe, it was 14%, 12 or 14% in here. Really big move. So really important to see that you know, come back. I don't think we would have seen the kind of flat day in the markets that we had today if this had held this loss. So good on Netflix for getting that back. That was a really important move there. All right, let's move over to what's next. Google. And yeah, not much going on here. Little bit of a break here, caught by the 21-day moving average. But again, not really anything interesting there. Microsoft, nothing really interesting here. It is still in this consolidation, building a base right under resistance. You know, getting ready to break out and make a move higher, right? So, you know, we break out of here. I think a break out of here probably fairly easily closes this gap. If it's a real breakout, it's going to get through this gap no problem. If it's not a real breakout, if it's a fake out, then yeah, watch out for this gap. It'll happen around 297. We get through that gap, no problem. Then we need to look at some resistance up here around 316-ish. Let's actually draw that in. And I think that could be a level that it may have a little more difficulty with. That comes right off of that gap right there, doesn't it? Okay. All right, so that's Microsoft. The last one of these is Tesla. And as I'm sure you're probably aware, Tesla had earnings after hours today. Now you can see Tesla was sitting right on an important support level. I can tell you that Tesla did not respect that support level. Their earnings were pretty much in line. I didn't have time really to go through it a whole lot, but they were pretty much in line. But obviously, there's something in there the market didn't like. Let's go to our intraday chart, and we are looking at a 5-minute chart of Tesla here. Okay, and you can see even before earnings were announced after hours that Tesla really started to roll over later in the day. And you can see, you know, some real volatility here on the release. It actually made a nice move up right into the high of the day and failed there, and then just sort of continued its way down and hasn't really bounced up a lot. Now, I'm not sure when the call is. I think these guys usually do the call fairly quickly. You know, who knows? Maybe they're on the call right now for all I know. But yeah, not ideal. And this has brought the indices down a little bit in the after hours as well. We probably should have looked at that earlier, actually. Taking a look at the SPY or the Qs, and you can see, you can see a little bit of a bleed down here. Nice catch on that VWAP though, and we'll probably see similar kind of action, after hours action in the Qs. Yeah. But nice and stable looking, so that's good at least. It's you know, and it's only a small move down. All right, let's go and take a look at some of the setups we've been watching. Okay, HIMS is HIMS made an exciting move. This is becoming a favorite play here. Like I've said a number of times, technically well behaved, right? Has a pullback, we move up a little bit, we consolidate right under that former gap. Really well behaved on the 50-day moving average. I mean, there's just a number of reasons for a technician to like this stock. So, if you remember in the number of times I've said, hey, we're getting really tight in here, we should watch for a breakout. And the last time I warned of that and said, I think we're getting close, was in the weekend video. And you can see yesterday we broke out and we did it with gusto. And look at this volume. This is I think the third highest volume ever in this stock. Yeah, third highest volume ever. I mean, almost cleared these last two times. Important move here. I don't know where this volume comes from. There was no news. There's still no news that I can find anyway. Unusual move. There's got to be something going on though. This is too much volume here for just a technical breakout. So I suspect we may hear something coming. But based on technicals alone, you can see that sellers tried to sell a little bit today, and the buyer said, oh, value, and they bought it right back up again. So that's good to see. We like to see that. And we've still got pretty decent volume in here too today. Slightly above average volume today. I would expect over the next coming days that we get through that gap and we come up and test this pivot high here of around $12. Now we've got another pivot, another resistance level at $12.50 just above that. And then it's a ways until we see anything else. Then we're getting up into sort of the 15 handle before we see any more real resistance. So it's going to be interesting to see how this plays out over the next few days to a week. Like I said, I'm not going to be at all surprised if we see some sort of news come out, and we'll have to see how that affects the stock. Because you don't get this kind of volume without some kind of news. So there you have it. That's HIMS. ARLO is one that we pointed out in the weekend video. Nice tight little consolidation here. I don't like how in the last couple of days, though, it's kind of started to roll over a bit. I would much rather, if it's going to tighten up and make these smaller candles, that it did it at the top of the range rather than the bottom of the range. So we'll have to see where this goes. And there we go. And, oops, sorry, I lost something here. A shout out to 7th Celestial for letting us know that ARLO does security cameras. They let us know down in the comments of the weekend video. Because I didn't know what this company did. So now I do. They do security cameras, and that's got to be a growing business. Everybody loves their security cameras. All right, let's move on to BlackBerry. This one, we were looking at this nice, beautiful little cup and handle here. Again, this continues to kind of grind its way down a little bit. However, we're still very nicely in the handle. And I think that if we get a move up in the market, if the market actually starts behaving and breakouts actually start behaving, this could make a really nice move out of here. So I'm going to continue to keep an eye on this one. And, if this type of cup and handle panel appears to you, I suggest you keep an eye on that as well. BLDR, this is Builder's First Source, another one we pointed out on the weekend. We were looking at this little bull flag. I mentioned that, I would rather have seen this bull flag form for a couple more days. That's not what we got. I went in here on Monday. Thought, okay, yeah, here we go. Went in on Monday, was a little disappointed with the pullback on Monday. It stayed in it. We had a nice little gap up yesterday. And today we pretty much gave back most of that gap up. Kind of a bearish engulfing candle here. So this is on a very tight leash for me. I don't mind taking a small loss. My stop right now is just below Monday's low. But obviously this needs to turn around and move higher right away, or I'm out of here. Okay, a couple of new ones. I know we've mentioned this one before actually, but it's worth mentioning again. I think this is AppLoving, ticker APP. You can see that we've got a cup and handle in this one too, and it's sort of never really, you know, you expect the kind of the breakout of the handle. You want to see momentum coming out of there, and we didn't get that. We're moving kind of sideways, just slightly up. So what I'd like to see here, you can see you've got a resistance level here at around 1734. What I'd like to see is a couple of really tight little candles up at the top of this range and then get a breakout. So that's what I will be watching for on that one. And the next one is Ocular Therapeutics. And you can see that this one has been in a bit of a range for a while. If we look further back, you know, this is all coming off a bit of a bottoming pattern. You could almost call this an inverse head and shoulders perhaps. It's a bit of a messy one, but it's kind of there. So nonetheless, nice bottoming pattern, except that it needs to put in a higher high here. We've got the lower low, we've got kind of a higher low here, and it just couldn't break out to a higher high, but it's put another potential higher low. We really need to see this break out here and get above this 650 level. I think if you can get above the 650 level, we could make a nice move. And I actually forgot to draw in the gap for you guys. So you want to be aware of this great big gap here. That will obviously act as resistance, but can also, once we're in the gap, move fairly quickly in there. All right, so that's that gap we want to watch out for, assuming, of course, we can get through this 650 level. But for now, I like this sort of rounding bottom kind of action here. I'm not really going to call this one a cup and handle. It's not smooth enough in there for me. But I do like how this is starting to form a bull flag. Now, it's only 2 days in the flag. I'd like to see at least 2 more days inside this flag before breaking out. But should be a fairly easy play there on the breakout. And you know, hopefully by the time this is ready to break out, the market's being a little more volatility in the market, and breakouts are working a little better. You know, working longer than 2 days with any luck. Okay, so that's all our setups. And that's all the charts I have to show you. So for our members, coming up next week, on Wednesday of next week, we will be doing Ticker Talk, where we walk through charts of our members' favorite tickers. And for anybody watching the recording, of course, we'll be doing our midweek update video on Wednesday as well. And, of course, the weekend video. So hope you enjoyed this. Thanks for watching. Hit that like button, share, and subscribe. And enjoy the rest of the week. Try not to pull your hair out too much with this market. Things will improve, and things will definitely get exciting again at some point. We just got to sort of, grind our way through this. All right. Good night, everybody.